Hey Covesters, welcome back to the Crypto Intelligence Portal. I'm Nathan.
And I'm Liz. Today's topic, rules of trading.
There's nothing more important than mindset while investing or trading. Without a good frame in mind, one will trade blindly and miss out on profits and opportunities. Emotion does not play a positive role in trading at all. Remember, logic, technical analysis, and calculated risk. As soon as emotion comes into play, you are not trading, you're gambling.
There are two main emotional states that can destroy traders, FUD and FOMO. FUD, also known as fear, uncertainty, and doubt, is the main cause of huge market dips. As more people continue to sell, the validity of the drop increases. The investor affected by this will sell at a low price and lose their position. If you are feeling any FUD at all, leave your workspace immediately.
FOMO, also known as fear of missing out, is the other emotional state that affects many traders. This occurs mostly when the price rises quickly. As the value skyrockets, beginner traders often feel like they must buy quickly before the value reaches the peak. This fear of missing out results in our trader buying at a high price where the cryptocurrency is overvalued. Instead of being greedy, be patient and wait for the best time to buy.
Another emotional state affecting traders would be chasing. After taking a big loss, the normal reaction is to double down and recover. By overreacting, it is easy to lose even more money. Thus, more money is lost and the chasing intensifies. The best way to deal with any emotion is to turn off the computer and engage in an activity other than trading or watching the charts. Each decision should be assertive and focused. Make sure emotions don't cloud your judgment. Here are 7 rules of thumb to follow.
Number 1. Never invest more than you can afford to lose. You should not be investing more money than you are willing to part with, regardless of how confident you are in your trades or your abilities. A smart investor should only invest a portion of their overall assets into cryptocurrency and stay diversified.
Number 2, never buy into a falling or rising coin. It can be tempting to buy a coin as it is rising so that you do not miss out on profits. You also never want to buy a coin as it is falling in order to try to catch the bottom or get a bargain on the price.
Number 3, learn to understand the technology behind the coin. Before investing any money, it is important that you understand what the technology is behind it and how the coin works. Making a quick trade for a quick profit is one thing, but if you don't know what you're buying, you're setting yourself up for failure.
Number 4, learn how to read candlestick charts. Japanese candlesticks used to be a secret of the rice markets in Japan. However, they are now one of the Western world's best known ways to analyze prices and determine the future direction of the market. Learning how to read them and understanding what they mean will greatly enhance the profitability and success rate of your trades.
Number 5, take profits and cut losses. It might sound like common sense, but when you're up in a trade, it's important not to be greedy. And remember to take what the market gives you. You should always be taking profits off your trades and investments. Otherwise, when the market turns the other direction, these profits will turn into smoke. The same goes when your trade is suffering a loss. Take the loss and move on to another trade before it gets worse. You may regret holding it longer than you should have.
Number 6, learn technical analysis. This plays a major role in the market movement. Aside from learning candlesticks, you'll want to make sure you've studied as much as possible and that you have a firm grasp on technical analysis. Without knowing how to properly read charts and price patterns, you are trading with blinders on. You will make better trades and be more profitable in the long run if you just take the time to learn.
And last but not least, number 7. Don't trade if you cannot withstand the movements of the market. Markets will always move up, down, and sideways. It is these movements that provide us with our gains and profits. Those who cannot handle seeing their account value swing have no business trading. You should be able to see your account decrease 50% in value without panicking if you want to eventually see 100% or more gains. In addition, always remember that a loss is not a loss until you actually close the position. The same is true with gains. Profits exist only on paper until you make the sale and put them into something else or cash out in fiat.
Finally, sticking to the rules of your trading plan is the key to your overall success as a trader or investor.
Alright everyone, we'll see you back here for the next episode at the Crypto Intelligence Portal.
Thanks for watching.